I'm Mark Geoghegan and you're listening to the Voice of Insurance podcast, produced in association with Advantage Go, enabling enterprise-scale underwriting through a single pane of glass. I really enjoyed recording today's episode because both my guests have been on the show before, and that always makes getting a conversation going much easier. And to make this session even more lively, we had something really interesting to discuss. Andrew Robinson's Skyward specialty has just entered into an agreement to buy David Ibeson's Apollo. In M&A, the parties often talk about a combined entity being more than the sum of its parts. And I think that in podcasting terms, this is definitely an episode where one CEO plus one CEO equals more than two. Both Andrew and David are strong and unambiguous business leaders, and the level of energy, camaraderie and enthusiasm on display here is infectious. For Apollo, the deal ends any lingering uncertainty about its long-term ownership and is another reminder of the enduring global attraction of the Lloyd's platform. And for Skyward, the deal is a vindication of Andrew's strategy since taking over what was then Houston International 5 years ago and transforming it into a premium-rated specialty insurer now quoted on the public markets. There's a lot of cultural affinity between the two businesses and a similar rapport between these two executives. And the next half an hour will absolutely fly by. Enjoy the podcast.
Andrew and David, welcome back, both of you, to the Voice of Insurance.
Thank you. Thank you.
Well, congratulations on the recently announced deal for Skyward to acquire Apollo Underwriting. I'm sure you've both done this 100 times before in the last few weeks, but run us through the rationale behind the transaction.
Well, I'll start and then I'll talk about the perspective from Apollo. So as I've shared with a number of folks, we weren't out necessarily thinking about an acquisition. We were thinking about our sort of range of options to participate in Lloyd's. And that started a couple of years ago, and had a chance to meet David back a couple of years ago. And that led to us at Skyward getting involved in a couple different ways. So one thing that we did is we started to support Apollo's Smart Follow. We set up a corporate member that allowed us to get a closer kind of upfront view of not just Apollo, but it was a chance for us to kind of reacquaint ourselves with the market, with capital support directly to 1969, 1971. And then we partnered on a credit opportunity along the way. So for us, it was really quite straightforward. We were looking for evaluating options to participate at Lloyd's, and through that got a relationship that really took multiple different tracks with Apollo. And I think over that sort of horizon, it became clear that we were really well matched as a company. David and I actually had a direct conversation about a year ago at this time. And I basically said, look, we have to get through 2024, which is a critical year for us. We were becoming accelerated filer in the US, which meant we had to become SOX compliant, which in itself was hugely demanding. And so we kind of set aside any conversation until earlier this year, once we got through that. And quite honestly, I think just the conversations really blossomed. And not only did we see there was good industrial logic and a fantastic match between our companies, but David can talk about the timing from an Apollo perspective, but it really seemed to just warm up and move forward once we really got the conversations going earlier this year. And from an Apollo perspective, I think David can describe what were they thinking about.
Does it kind of look like a very friendly transaction? So you really knew each other. It wasn't the sort of thing where, David, you were running some kind of auction or that kind of thing. This is somebody you'd already known and already partnered with, and then you went further.
Absolutely. We've been working with Andrew and his team for the last 2 years. We've been having very minutiae business discussions as well as strategic discussions. And we very quickly established that we had a cultural fit and a business ethos fit. Rule the niche, which is the philosophy of Skyward, very much works with our innovation and looking to provide value in a way that means we're not just competing on price. So as was widely forecast, we had private equity, so sooner or later we were going to have to refinance. The conversations with Andrew meant that we felt that it would be a really good partnership, and therefore actually, as long as the financial matters worked, then from our perspective, why go out to an auction? We might as well just work with one partner and deliver it.
So as a result of the deal, what do you think your other partners, your other stakeholders and suppliers and customers, what will they notice dealing with you in the short term? And what do you think they would notice longer term? What will be the changes?
I mean, I think that there's beneficiaries in all parts of our business. Certainly, there are capabilities at Apollo that we can combine into what we're doing in the US. I think a great example is James Slaughter and his team are working on something around a specific liability coverage around AI. It's something that we have been working on as well, first to launch in our professional liability, in our miscellaneous professional liability business. And that's a conversation that we're going to develop probably before even the transaction closes. We're following kind of similar tracks on the technology front from an underwriter vantage point. And I think that each of us are sort of progressing in ways that are complementary to the others. At Apollo, really impressed with the way that they're doing risk scoring and pricing strength. And on the other hand, we're very far down the path on using AI to take really complex submissions and put them into consumable visual narratives for our underwriters. And you are looking at almost a qualitative versus a quantitative perspective. I definitely think that IBOT, it's a one-of-one business, and certainly lots of good things happen in the London market for that business, but that's clearly something that I believe that we can add to it by bringing it to the US. I think accessing through some of our distribution, and quite honestly, we have a dedicated statutory entity that has our group rating that's unused that we want to rebrand and utilize. And there's no shortage. And it doesn't even contemplate the obvious things that we could be doing to leverage Apollo's model on its capital light approach, what we could be doing on the investment side, what we do in the reinsurance side. All those are just fantastic opportunities that will play out over the course of the next few quarters to the next few years.
And David, from anyone who's known Apollo for many years, what will change in the short term, and then also what's likely to change over the longer term?
So in summary, nothing's going to change, but actually in reality, there is lots of opportunity. So by saying nothing's going to change, we're still going to be a third party capital model. The majority of people still will work in the syndicate, in Lloyd's, but the distribution opportunity now that we have a partner and owner in the US is just massive in a way that we can service our clients better. And the opportunity, therefore, to bring business from America that we wouldn't otherwise be able to access into the syndicate, and therefore to improve the opportunity of the business being written in the syndicate, is there as well. So from my perspective, no change. Apollo's always been changing. We pride ourselves on innovation, so there will be change, but the change will not be driven necessarily by the acquisition, more by the opportunities we can have in partnering as we go forward.
So for all those third parties, really, you're still in business, still very much looking after their business. Obviously, you're managing third-party syndicates and obviously managing a lot of third-party capital. And there's an unambiguous continuation of your commitment to all of them.
Absolutely. I mean, in fact, I think they should see this as positive. We've now got a permanent owner rather than one that needed to be refinanced, that is committed to our model, and in certain times will be able to provide us with more opportunity to invest, grow, and provide backup. So there's more certainty that the model continues into the future. Whereas when we had private equity, knowing that we would have to refinance between 5 and 7 years, there was always a risk of someone coming along and not appreciating our model as much as Andrew does.
I'd go further, Mark, and I'd say that not only do we appreciate it, we actually believe that it can be a big part of how it is that we think about our capital structure coming from the US in the future. Put differently, we are fully together. Both of us are about being the very best underwriters you can, being top quartile underwriters. That's fundamental to everything we do. The way that monetizes and plays through our financials, we now have, with Apollo as our partner here, a new capability that could be incredibly valuable to the company. And I'm very excited, really, really excited about that. And so even go further than what David said, it's not just long-term, we have the right structure and a commitment. I actually believe that it's going to form part of our core approach to the economics of our business in the US going forward as well.
Yeah, and you mentioned about those new capital structures. Obviously, Lloyd's has developed a lot of those, and Apollo has actually been some of the early adopters of many of these new structures, particularly the London Bridge 2 structures. So again, it sounds like you're very much going to be availing the wider Skyward group. We should be expecting to see you use those structures as much as Apollo already does.
Yeah, and I mean, I think one of the things that we're going to have our ear close to the ground as a company is as I said, our business doesn't change. This kind of rule your niche strategy, being a top quartile underwriter, building defensible positions, like having a legitimate competitive moat. And we're going to do that with the strength of not just underwriting, but with the talent and technology that each of the organizations have will not change. Whether that is we're going to realize the value of that through traditional underwriting and investment income or through more of a fee-based structure. We're going to listen to what also our investors think about that as well in shaping the company. And believe it or not, that was a big part, particularly for the industry-focused investors following the KBW and Barclays conferences in the United States. That was a big part of the conversation, and it was incredibly instructive for us. So ears already to the ground on that.
Yeah, I suppose to sort of change the balance, a greater percentage of your earnings will be from fee-based, which I'm sure are more popular, certainly demonstrably more popular with investors today than balance sheets are.
You know, we have one competitor in the US that has a 8 to 9 times book valuation. We'd be happy to do that as a traditional insurer. And we would also be very happy to be assigned a private equity multiple that is being given to certain fee-based underwriting businesses. We're happy either way, as long as we're recognized.
And given the management have rolled 40% of their stake in the business, we would also be very happy.
Right.
Have you always wanted to increase the fee earning part of your business? And obviously this is doing that for you on a pro forma basis. You will have a higher percentage of that earnings coming from fees, Andrew. Do you have an idea in your mind of a sort of ideal balance between what the balance sheet should be producing for you and what fees should be producing for you?
I would say to you, Mark, that during more recent years, it is fair to say that the industry structure is changing, right? Now, whether that's going to be permanent or not, time's going to tell, right? There's been a lot of MGA development in the US that's finding its way into other countries as well. Every day, we all open up various insurance news sources and we hear another sidecar or third-party capital structure. You're hearing things like private credit come in and so forth. I think that it's changing. I wouldn't say that it's always been something that we've aimed at. I think that it's become more viable as we look at the wonderful success that Apollo has built. And I think that we learned a lot from David and his team, and it just opens up the options as opposed to there was never doing a Fidelis and splitting our company. Like that's never been on our agenda. I think this is a capital tool that is available to us. And we have a partner in Apollo, one of the very best in terms of really making it permanent in nature and showing that it's a demonstrably strong model that is rewarded. So that's our thinking.
And I suppose having that hybrid nature, it gives you much more flexibility, doesn't it? Because you do have your own capital. If that third-party capital isn't as abundant as it is, sometimes we know, sometimes it's more abundant than at other times. And if you can marshal your own capital behind your own underwriting at times when you need to, of course, that gives you more flexibility than somebody who doesn't have that option.
Yeah, but I mean, David can talk to this. I think, I don't want to speak for him. I mean, I think he would view his capital support as slightly different than you describe it, right? And that's something that we came to learn through this process. I mean, David, I don't know if you want to comment on that.
Yeah, I mean, we've had long-term quality commitments from our capital providers. So they are an integral part of our business. We treat them as an integral part of our business. They get involved in new business opportunities. We discuss it with them. With many of our capital providers, they're not just capital providers. They are business partners. They are reinsurers. And actually, we develop opportunities with them. So the relationship we have with our third-party capital providers is much more than just capital.
Yeah. And I think our observation is that it feels very permanent to us. And so maybe that's unique to Apollo, but I understand your question, but I think that we've learned through this process, Apollo's kind of unique in this regard.
Andrew, you've had that long association with Lloyd since going back to when you were working for the Hanover, and goodness knows, I can't even remember how long ago it was now when you were part of the team that acquired Chaucer, which is probably when I first met you.
2011, we closed it after the Ring of Fire stopped burning.
Absolutely. So, Andrew, I mean, you've had that engagement with the Lloyd's platform for a long time. How would you say it's evolved over that 14-year period?
Well, at the risk of being too gratuitous, first off, I think the current leadership is super impressive. It just feels like it's legitimately focused on the right things. I couldn't be more excited about that. I think Lloyd's has been terrific in the last few years, right? They've simultaneously dealt with the poor performance and was able to attract new capital, and to do both things at once is a pretty extraordinary outcome. So I think that Lloyd's has come a long way It is dogged with the same problems that it's always been dogged with. It's an expensive place to do business, and it needs to get serious about its efficiency of operation to complement what is clearly a unique capability around syndicating risk and certain classes that are written there where there's a lot of talent and putting capital structures in place that are efficient. But the other side of that is it has to make progress on that dimension to be competitive here as the market gets tougher in this turn, and without backing up at all, not even 1 inch on being disciplined around performance, right? Not tolerating anything that starts to raise questions about whether you're doing business the right way around the corporation. And so we wouldn't have done this transaction if we weren't a big believer in Lloyd's first. That's why we started this process of getting present there a couple of years ago. And then, of course, we believe that we're partnered here with the number one company in terms of profile to being a partner with us. So both had to be true.
Something that always comes along in the calculus of the efficiencies you might be able to gain from combining two businesses together. Are there any obvious ones that come with this other than capital efficiency?
I think that we would both just say, first off, just to sort of address something, we don't see this as being a cost efficiency from a talent or people perspective. I think that there's going to be efficiencies in reinsurance and there's going to be efficiencies. You have to figure it out, right? Because when you're doing that sort of Lloyd's and US platform, you got to make that so that it works. I think on the asset side, the greatest are about the growth opportunities that we're going to put together. And I think that leveraging each company's unique DNA around technology is another dimension. But I don't think that there's kind of efficiencies in a traditional sense. It really wasn't anything that guided the transaction on either side.
We run both companies pretty lean. We're not sitting there going, we can make people savings. That was not factored into the calculations. I think as we've learned more and as we continue to discuss, the exciting thing from the Apollo perspective, Andrew talked about technology. We're both really interested in that area, but it looks as if we've sort of approached it from different ways around. So things that we need to do to develop our technology platform, we think Skyward may have already done. And some of the things that Skyward are looking to do, we have may already done. So actually on a discussion this morning where we're going, well, actually, if it's already done, we don't need to build it. That's going to be an amazing thing where we can just jump forward in terms of our development because that was our next phase. So we're really excited about that opportunity. But again, it comes back to the word opportunity rather than any efficiency savings.
Well, one of the things you've been pioneering is the fast follow underwriting, which, as you said, Andrew, you participated in. How's that experience been, and will you be wanting to allocate more capital towards?
So smart follow is fascinating. I think that there's a lot in London that is branded as smart that probably is anything but smart. I think that Apollo is really smart. And James Slaughter, Faricella, those guys, they've really got a perspective. And so their perspective is a lot of things that they've been advancing on the technology side gives them both efficiency in following others, but also more data insights and more portfolio insights. And the belief that is developing, which we absolutely subscribe to, is that capability is potentially the front end for having syndicated risk follow Apollo. And it might not necessarily only be in the Lloyd's environment, but you could see bringing that to US distribution. You could see that following us where we're the lead. And literally, this is like one of those cases where you're like, I've been in the industry a long time. I've seen it all. And then you sit with James and you sit with Ferris and you're like, you guys are really smart. You're coming up with something that's different and you're not falling into, we're going to define it like in only one way. In fact, probably the bigger opportunity is not to just be a straight follow facility in London, but to go to where the businesses originate and use that capability differently. Yeah. That's just a case where you're like, damn, I wish I thought of that. You guys are smart. And by the way, that happened a bunch of times through this process. I was over last week. I spent a lot of time with those guys on this specific thing. I'm just really impressed with the thinking. And I think that that's one of those big areas of development.
I suppose something that really cements your relevance as that lead underwriter. If you know that you're almost semi-automatically following you are swinging a line of many multiples of what you're putting down. And that is providing the ultimate certainty to that broker. Just have to come see you, and they know this thing is done at the price that you've just quoted, and it could be done now. I suppose it increases your relevance, doesn't it, to those markets?
It's playing to Lloyd's strength of syndicating specialty risk, right? I mean, it goes right to the strength. I think the innovation that Apollo is bringing around, we can provide information for the syndicated support that's better and more, and obviously over time creating more value. That's a really powerful idea, super powerful idea.
I get the impression, certainly I was looking at some of your investor presentations. I know you did some recently after the deal. We're both underwriting businesses that really prefer to be writing on your own paper, writing your own risk and not delegating underwriting to other parties. In fact, there was one of the slides that was presented as a positive. You presented positive of Apollo, that it had a lower proportion of its business that was delegated, about half of the percentage that was average in the Lloyd's market. That's why my impression that you took that as a positive. We've already spoken about how the structure of the market has changed, though it's changing. There is more business that is being delegated by the rest of the market, and that's taking a higher share of the market. How do you react to that as more instinctively underwriters want to write on their own account?
A good and big and complex question. I'm going to say that there is place for delegation, okay? Absolutely accessing distribution, process, expertise, things that you don't have. We don't believe in having to do everything ourselves. So, we do follow people. We sign up to consortiums, but that's when we're finding people with expertise in a niche or processing capability that we just don't have. So we do it. We believe in it. We believe in it when it's done in the right way, when there's alignment with the MGA, and when we're comfortable on that basis. Market evolution of MGAs, well, I think that's a whole massive topic. I think you can see that there's a challenge out there at Lloyd's in terms of, do people have the capabilities? Should they be doing it? Is it a soft market play? The questions always have abounded in that. If you maintain your relevance, and I think you can see that in 1971 and 1969, and you're clear why you are leading, then I think the threat to the business is that it's threats to a business where they are not adding value to the end customer. Of course, it does reduce the market share if you've got a lot being put under facilities, but that just will push us to make sure that we add the value where we can. We will support MGAs, but we'll make sure that the value proposition is the right one.
Our simple shorthand on this is that we want to rule our niche. And if there's an underwriting facility out there that, owing to technology or distribution relationships or something that we would find difficult to replicate, and it's a class we want to support, and the structure, to David's point, is one that aligns our economics, that's a great setup for us. And it's not like we don't like delegating authority. It has to just be in the right circumstances and in categories that we're not doing for ourselves. And I think David captured it. I do think that there is a fundamental question about what your role is to investors if you aren't more than just sort of a piece of paper and capital. And not to say that's what happens when you're doing that, that partnership with MGAs, but certainly I'd like to think that when you own the underwriting and claims and risk management elements, that you have the ability to be immensely valuable to your trading partners in ways that you don't if you are delegating.
What about the market itself at the moment? Perhaps we're in a sort of hard market softening phase. How's everything, particularly how submission flows and business flows holding up into your markets?
We expect to finish the year at 99.5 or 101% of the planned underwriting premium income. So I guess the advantage for Apollo in 1971 is clearly an absolutely unique proposition, and therefore the value add there is obvious. The 1969 proposal, we clearly have competitors, but actually we have a very diverse portfolio. So if one element of our portfolio is getting more competition, then other areas of the portfolio can pick up the slack to deliver the profit. So we feel relatively confident about our ability to deliver to our plans.
You're seeing the submission flow is still there, that you're still getting lots of inquiries.
Oh, yeah, definitely. That's not to say that it's not getting tougher. It's just that our underwriters are working hard and it's coming in.
What's nice is together we manage 3.5 going to kind of $4 billion of premium, but it's made up of a lot of interesting small pieces. And to David's point, 71's not only unique, it's also in categories that are very high growth industries, right? If you're in the sharing economy, you're in autonomy, those are high growth industries. And we have some of those in the US as well. So I think that's right. One of the issues is it's not just a singular market where you can say, oh, we're going to generalize what's happening in property and call everything a soft market. It just isn't the case.
But the main thing is you're still getting a really healthy showing of business. And that's probably the fundamental thing, is that if you can't see it, you can't write it.
Yeah, from Apollo's perspective, what's been interesting over recent years is actually what James and the team have done is they put us in a different place. I would say 5 years ago, it would have been our size and our relevance to the brokers was such that we would have had to work harder. We are now of a size and relevance. People do want to come and show us the business. So it's a different proposition to where we were 5 years ago.
I couldn't be sitting in 2025 and not ask you about what you're doing with AI. So where are you finding the best use cases?
I think both our organizations are focused on underwriting first, claims probably a very close second. We're both trying to tackle. Our thinking is like, hey, how do you get the underwriters, instead of sort of a kickoff, a touchback, and you're starting on your own 25-yard line, which basically means you're in your own half, to have the ball run back to the opponent's 28-yard line before you run your first offensive play. That's effectively what we're trying to do. We're trying to get to a very different position before our underwriters really start working the submission. And we're way down the path on that. I'm sure that the American football analogy doesn't apply to Apollo, but they're doing many of the same things, just approaching it from the opposite side, more analytical, data-based, and ours is really using kind of the power of NLPs and GPTs to make sense of them. And I think we can leverage what both does. On the claim side, we're both looking at pretty much the same problem, which is the ability to identify severity, using natural language models early and be able to then highlight and direct and ultimately reserve claims even faster than each organization currently does. And we're shared in terms of solving that problem. We've been attacking it, I think probably as some others have as well.
And David?
Yeah, I was going to say, do more of it, do it faster, do it more accurately, and leverage the people resource that we have. And I think that is key. And you have had podcasts with James talking about augmented underwriting, and he's using the word underwriting in terms of the whole business. And as much as we can augment the people, the valuable resource that we have with AI is what we will do.
So get them near a goal scoring opportunity, shall we say? So bring it back to football in more European terms.
Yeah,
definitely.
One last thing, which we often overlook, and I often overlook because I'm a typical journalist looking at the numbers and looking at the strategies and all that stuff and often forgetting about the human side of things. How are you going to integrate the cultures of your two businesses? Sounds like you're built from similar DNA. You're going to have some kind of offsite or do something. How are you going to try and get all of your people to get to know each other and talk to each other and do business and collaborate more?
Well, let me just say, if there was not this really clear cultural alignment, philosophical, talent-oriented ethos, we wouldn't have done this deal. I don't think on either side. I think that if there was one thing that spiked out, that was the thing that spiked out. Talent is the lifeblood of our businesses. And both of us start with that point of view. I was in London last week, and first off, I was completely blown away. It was this incredibly uplifting experience. And lo and behold, because the week before to an all hands, I had announced that I'm a Spurs fan. I actually got taken to a game on Tuesday night, which was terrific, with some of the underwriters, which was also terrific. Here's what happened last week. First off, we had a bunch of our folks together at WSIA at the same time, and they got on smashingly. And I think there was some immediate to-dos. But I personally walked away from our interactions with 10 connects on business opportunities that have already been made. And so I would describe it as kind of much more organic. It's putting our chief data officer together with the folks that are focused on data at Apollo. We've already hooked up various underwriting parts of the business. And so what I would say to you is that from my vantage point, it's already happening. And I think it's going to be less curated and more organic. And that also kind of fits with our cultures as well, I would say.
Yeah. So you didn't have to walk around with those sort of, hello, my name is badges.
Not yet.
So the day we announced, what we did was we put up the values of Skyward and we put up next to the values of Apollo. And excusing the language difference between American and English, there was an absolute alignment of our corporate values in terms of people. But I think when you use the word integration, that sort of smacks of you've got two businesses doing the same thing and you've got to bring everyone together. And actually, on the data we sent out, there's 4% of business overlap. I think that was the statistic that we came up with. And that might be an overstatement of business overlap. It may well just be something that happened to fall into a similar box. So integration isn't really the word I would use. It's the how do you encourage the collaboration to get the best out of the opportunities. So that's a much less forced basis. That's as and when people have ideas, opportunities, interest. So I don't see Andrew and myself driving people to go around with name badges, because the two businesses actually have to get on and deliver their existing businesses. So we don't want to be distracting them saying, you've got to meet this person. It's more of a, is there an opportunity? Oh, well, I'm over there. Oh, yeah. Actually, why don't you talk together and see where there's opportunity? So as Andrew described it, it will be an organic development. And if anything that we have to avoid is we need to make sure that we filter the opportunities, because there could be so many. So we just need to make sure we focus on the ones, because we also need people to deliver on plan A. And then plan A plus is just making sure we focus on the real value added ones, because there will be lots of them.
That sounds very, very common sense, and very, very brave of you to come out as a Spurs fan, Andrew. Because of course, the minute you do that, you alienate everybody else, who's not a Spurs fan.
Let me just say, at this particular moment in the season, I don't know when this is going to get released, Mark, but at this particular moment in the season, it's probably a pretty decent time to declare it. So I don't know how the rest of the season's going to go, but
certainly it's the history of Spurs fandom, I think, is that you can be very optimistic at the beginning of the season, and then there's usually a period of disappointment sometime after Christmas.
As you know, I'm married to a Londoner, the Spurs fan, so I didn't actually have any choice in it. So it wasn't sort of a individual decision, it just was forced upon me. So
anyway, past performance is not always an indicator of what's going to happen. We all know that. So thank you so much, both of you. I've really enjoyed talking to you. It's been really enlightening. Good luck with all your collaboration and the respective parts of the business. And we'll book in a time to speak to you both again at some point in the future. So thanks very much.
Thank you. Thanks, Mark. Appreciate it.
Well, I hope you enjoyed today's episode. If you did, don't forget to subscribe or leave a like or a review or recommendation on whatever podcast platform you used to access this program. These really help get the word out. Before we go, just a quick reminder that advertising slots are available here and in other places in the Voice of Insurance podcasts. Podcasting is the fastest growing medium and attracts a high quality audience of key decision makers. It's also an intimate medium where you, the listener, are right in the room with me and the interview subjects. Needless to say, that means it's a great way of getting your message out directly to an audience, because you know you've got their full attention. It's also very cost effective. So get in touch with Mark at thevoiceofinsurance.com to find out how you could be speaking directly to the industry. The Voice of Insurance podcast is produced in association with Advantage Go, enabling enterprise-scale underwriting through a single pane of glass. Voice of Insurance is produced by me, Mark Gagan. Music was written by Anna Gagan and produced by Carlos Gagan. Check out more podcasts and written comment pieces at www.thevoiceofinsurance.com.